The world of investments is full of buzzwords and acronyms, and this summer we heard more about a new one, TINA, which stands for There Is No Alternative. In this week's U.S. Bank Economic 360, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman joins us to talk about what TINA represents and what she might be telling us about the market. Mike is with Business Courier publisher Jamie Smith and TINA in the studio. Mike and Jamie.
Thanks, Peg. Mike, thanks for being here today.
Good morning.
Now, we're not talking about a tropical storm or a hurricane here.
No.
Talk to our audience a little bit about what's the concept of TINA.
Sure. So really at base, it's just an explanation that some have developed for explaining why the market is where it is right now. If you recall, we talked a few weeks ago about the market being at all-time record highs. But we've also talked recently as well about the economy just being kind of iffy, a little so-so. And that creates a disconnect. Usually it's strong economy, strong market, weak economy, weak market. So how do you explain that disparity? The economy isn't doing all that well, but there's all of this money pouring into U.S. stocks. And so how do you explain that? Well, one alternative is that relative to anything else out there that you might invest, the only thing that looks reasonably attractive are U.S. stocks, and therefore they become there is no alternative.
Well, how is TINA then going to affect investors? I mean, what do they need to consider?
Right. So there's an important distinction to remember here. It's not going to affect all investors equally. So say you're an individual and you have some cash that you might want to be investing, but you look out there right now and you say, gee, I'm not really that excited about stocks or bonds or commodities or anything. I think I'm just going to sit tight. I'm going to hold on to my cash. It's not going to pay me anything, but I'm content just to wait and see what comes down the road. Maybe there'll be a better opportunity in a few months. A personal, very reasonable expectation for an individual. There are other investors, however, large pools of money that maybe don't have that same luxury of waiting. So if you're a sovereign wealth fund or an endowment, a pension fund, you have to hit a return target year in and year out. You don't have necessarily, as all this cash is coming in for you to invest on a regular basis, you can't just sit on that cash and still expect to hit that target number. So you've got to invest in something. But what? U.S. bonds aren't paying anything. Right. International bonds paying even less. European stocks, probably not after Brexit. So again, you're searching for something that looks reasonable to invest in. What is the best of the bunch? U.S. stocks, because again, there is no alternative.
Okay. Well, what is she really trying to tell us about the market?
Yeah.
I mean, is there an answer?
You know, if you think about it logically, investing in an asset because it's the least bad of the bunch isn't really a great long-term strategy, right? We've kind of seen how this ends before when too many people pile into one particular type of asset. That never ends well. Not to suggest that TINA has placed us in a bubble or even that a bubble is in the process of forming. But, let's think about it. We're heading into autumn, which historically is a very difficult time for the market anyway. You layer the Fed on top of that, you layer the election on top of that, and it could get pretty dicey. So TINA's been this nice influence, this great force to push stocks higher, but the question becomes, does she have the ability to keep stocks higher when things start to get a little dicey?
Okay. Well, you keep your conversation going with TINA, and then we'll have you back in and we'll talk a little bit more as fall goes on.
Will do.
All right. Thanks a lot.